Hey, I want to welcome everybody to the latest Denny Artachi show. Really excited. A good personal friend of mine who took the time to talk to us today, Mr. Drew Miller, ladies and gentlemen, with Independent Solutions. Drew, how you doing, buddy?
Doing well, Denny. How are you?
Good. So, folks, Drew is Clark Kent's double. You see he's got the glasses. He's in shape. He eats well. He actually works out more than I, as you can see. His body fat is a lot less than mine. Drew, I want to talk about markets today, independent solutions, obviously very important. Wow, it's been really interesting. Uh, the first thing people want to know, and I discussed this recently, is how markets are doing. And I think, folks, if you're listening, I personally use independent solutions for my top clients. They do a fantastic job. Think about how many uh, RIAs or committees that you never get the fund manager on the phone. Well, that's not the truth with independent solutions. They're hands-on. You can actually have a fund manager talking to clients, which is a huge bonus. So, Drew, things have been wow. I mean, better than I've anticipated. I look at, the S&P in a year is up 25%, the Nasdaq's up 31, and the Dow Jones 14. Now, I think that's really important because, everyone's waiting for bubbles and things like that. But you know what? You all preach like I do. Invest the right way. Don't chase the tail and trends, and you will be rewarded for taking risk out there. My goodness, the S&P is still averaged over 17% the last 5 years and over 18% the last 10. NASDAQ, 25 in the last 5 years and 30 in the last 10. And of course, the Dow Jones, which a lot of people think, hey, that's the market. It's averaged 9.8 in 5 years and over 13% in 10. So, did you all think that the market would have performed like it has the last 3 to 5 years?
It's interesting. You mentioned the Dow, and we always have this running joke in my family because my dad always makes reference to the Dow and how's the Dow doing today and this and that.
Right.
And I said, well, do you own any of the stocks in the Dow? And no. Well, then that's really not an appropriate measure of your investment portfolio and how returns are. However, it is good to know and to be up to date. But I think a lot of emphasis sometimes is put too much emphasis, I think, is put on that. But and I think to your point earlier, the way that we kind of look at whether it be markets, up and, markets are going to go up and down, as you said, and volatility remains with us constantly. Our investment committee, we have a wide range of differing opinions on the investment committee, a breadth of experience. I full transparency, I am not a portfolio manager, so I don't make any of the investment decisions for the firm. However, I do get to be a part of those investment committee calls, and it's interesting to listen to these men and women that have got years and years of experience kind
Yeah.
of talk through whether it be the current economic cycle, current market cycle, and then kind of relay that back to past experiences. I mean, collectively, our investment committee has over 200 years experience in investment management and in analyzing, market trends and economic trends and inflation data and all of those types of things. So I think, if you look back over the past, 12 months, I think they were definitely still very bullish, on the prospects for the market. However, we did have some reservation coming into the election year of what, potentially could happen with volatility just around the election itself. And I still think we still feel that, we have a long way to go before November, and there's a lot of uncertainty and things that could happen. And then, kind of trying to figure out what's going to happen with the Fed. I think, at the beginning of the year, everybody, had priced in we were going to have some cuts, and that doesn't seem to be materializing and may or may not take place by the end of the year. But those are all things that are constantly talked about. They meet monthly, and it's really really good just to kind of be a fly on the wall and sit back and listen. And then I get to take their thoughts and condense them down and take them out to advisors like yourself.
Well, I love your humbleness, but folks, Drew actually has a very important position. He's head of advisory services and business development. He may not be a fund manager, but he is a certified financial planner. And you're right. You take John Thur, for example. My goodness, he's got 45 year. He's also in good shape. I don't know. Some of you guys, I don't know what you eat or what you do, but John has run the fixed markets on the institutional side. We're going to have him as a guest as well. And he really watches these things like unbelievably. And your whole committee again is very well rounded. I guess the first thing that I had a couple of questions. Most people want to know who is Independent Solutions and how do you work with financial advisors and their clients that could be different from a lot of the, investment committees that are out there? What makes you all different?
Yeah, no, absolutely. So Solutions Wealth Management, we are an SEC registered investment advisor, and we are headquartered in Buffalo, New York, but we also have offices in Florida, California, and Texas. And we provide investment management and financial services for retail and institutional clients across the United States. And so we currently manage just north of $1 billion in assets under management. Like I said, we've got the investment committee with over 200 years experience. And we're really focusing on the three tenets that our firm was founded on, which are grow, protect, diversify. So we are really trying to manage clients' investment portfolio, but their entire financial picture with those three tenets in mind. With respect to kind of what we do, I mean, we're known for investment management. We do offer a fully diversified asset allocation models in both mutual fund and ETF formats, tactical and passive approaches. So, for clients that prefer an active approach as opposed to a passive, we offer both of those. We do have, like I said, both mutual fund and ETF strategies, but we also have a completely diversified universe of equity-based strategies that either tilt to the growth side or the value side, and investors can access those on a standalone basis, or we have blended models that blend several of our most popular equity strategies together. So we really kind of, run the complete gamut of everything that an investor could potentially, need access to from an investment management standpoint. One of the other things that, makes us unique, you said how we work with advisors. The
Yes.
thing that's really unique about our firm is that our firm was founded by financial advisors for
Yes.
financial advisors. So, our leadership consists of active financial advisors today. And so they are still in the trenches like you are, Denny, every single day,
Exactly.
trying to go out there and meet with clients. But they've also now started this firm, in addition to several other firms in the enterprise that we exist in, that really focus on helping not only clients but financial advisors grow and build their practices. And so it's really a collaborative approach, from the top down, whether it be the owners of the firm, the investment committee, people in roles like myself. We're all here to, number one, help the financial advisors and help build their practice, but then also help the clients of the financial advisor. You had mentioned having the ability and the uniqueness of having, direct access into a portfolio manager or investment committee. That's entirely true. I'm sure you have clients that may have assets with, other money managers such as a BlackRock or American Funds, and they may be in their, small cap strategy or, mid cap, large cap, whatever it may be. There's no way that they're going to have access to whoever's running that money from a portfolio manager standpoint. If Denny's client comes and talk to Dan Neiman, who's our chief investment officer, we're going to make that happen, within a couple hours, if not, if we have to push it off a day, whatever, because of schedules. But we have access to the brain trust, the intellectual capital on that investment committee that are overseeing all of the strategies that clients have access to. So I think those two things are very unique in our industry today, and the way we work with advisors and also can support and service retail clients.
Now you can breathe in between sentences. You don't have to hold your breath and spew it out for 10 minutes. I know this personally because for some clients, the better part of last year, we had switched and bought some treasury bills because of short-term liquidity needs. And I know this firsthand. I've sat in a couple of meetings. You guys don't always agree on everything, but you certainly have the same goal in mind. You have different experiences that you bring to the table. And ultimately, we want to do the best job by clients. And yes, I do see that you have the strategic mutual funds, you have intelligent ETFs, rotation ETFs, you have your core mutual funds, tactical fund strategies, blended models, and of course the equity portfolios. And I think, like I said, it's really something when you can actually get the fund manager on the phone with the client and they customize a portfolio. I will tell you that I don't think it's worth talking about performances because I'm looking at your sheets and you guys are not terrible at what you do. You've got great returns, but that's not clients don't give us their monies just because we promise them the best returns, but they're custom. It's not a cookie cutter scenario. And I love the fact that you all can change as the client's needs or investment needs can change. And it happens quickly. It doesn't get lost. So with the 200 years experience, I think we have it pretty well covered. And you do manage money on fee-based. And is there something that you think you all do besides what we mentioned that could be different from a lot of fund managers that are out there or a lot of RIAs that are available?
I think just the ability to have, complete access to the entire, menu that you just listed there. A lot of times with money managers, they're very siloed. So they're either going to be an equity manager,
Mhm.
only deal with ETFs or only deal with mutual funds or fixed income, whatever it may be. And because we have such, depth of experience and the managers that have done pretty much everything and for years and years and years longer than even I've been around, I think it's really, really neat that we can not only utilize the strategies that we have, but they're constantly building out new strategies and bringing on different ideas. You mentioned that we have the tactical offering.
Yeah.
That's something brand new just in the last year that we brought on, and it was because we realized that from the inception of the firm, we were more of a strategic asset allocation money manager, where we are more of the buy and hold passive approach, but we realize that there's a whole segment of the market and clients and advisors that prefer that more active or tactical approach. And so, we went out and we searched the market and we found some strategic partner, Alexis Investment Partners, and Jason and Alexis Brown. They're actually here in Texas with me,
Okay.
that are, leaders in that industry. And so they basically helped us build a whole suite of tactically based models that have just been very, very well received. It's a nice way to add a hedge of protection to a more strategic portfolio. And it's been successful. And what we're really trying to do is just create blends, whether it be blends across growth and value or blends across strategic and tactical, to really try to, make that experience for the client less choppy, less volatile, make it a smoother ride along the way, because the market doesn't always go up, as you know, Denny. And when it
Absolutely.
turns, it's good to be protected if you can.
Well, the thing is that, I get all the newsletters and certainly you all are active. You do rebalance portfolios when you see things changing. But the real success stories is you have like Mike Lomas, Glenn Wiggle, and David Marioc, and John Thur. They literally have clients that started off with them with $100,000 that have nice seven-figure portfolios. And I think a lot of how we earn our keep, and you do as well, Independent Solutions, and I do, is governing behavior, not trying to chase the tail and grab onto a trend. Because I mean, look, 2022 was an interesting year. Equities and bonds were kind of getting smashed. So those who had an emotional reaction to it and decided to get off course, they didn't reap the rewards of sticking to the plan for the next 2 years. And I think that's the biggest challenge and message that most investors need to understand. Uh, you know, you don't have to be the most riskiest investor to outpace inflation. There are different ways of doing it. Of course, you cannot guarantee it, but I think too many clients, and again, I'm not against annuities or pro annuities, they're just another tool, but many times they'll try and fly to safety over a guarantee. The risk is minimal, but also their reward is minimum. And so I know most hardworking people who are working for another 10, 15 years, they need to have the right plan to begin with, stay the course, and try not to be emotional about it. You mentioned the election. Yeah, I bet it's going to be bumpy going in, but I've got to believe if you're investing for the next 10 years or so, if some things go on sale, buy some more of it.
Absolutely. Yeah,
Yeah.
no, and you're right. Yeah, you're right. And I mean, so much of what I do in advisory consulting is working with advisors like yourself. And a lot of times that means getting on the phone with clients to talk through those exact conversations that you're having, right? It's like, let's
Right.
really try to break down exactly what is the purpose for these funds. You know, are we siloed, or is it part of a larger picture? What is our time frame? What is our, suitability, our risk tolerance level, and really try to remember that over a successful, other time periods, because a lot of times, and we're all guilty of this. We see the hot dot and we see, man, that strategy did great. Well, I need
Yeah,
to go over
give
here.
me
And
the
it's like,
next
no, no, no.
NVIDIA tomorrow.
Exactly. And so, and again, that's really kind of the reason that we wanted to try to go more towards a blended approach, because we know that there's benefit in value, and there's benefit in growth, there's benefit in tactical, there's benefit in strategic. But we're not always going to be right on which one is in favor at any given time. But I think if we put things together, again, we can smooth out that ride and hopefully protect on the downside while capturing that upside potential, and really try to lessen the volatility for the clients as much as we can.
Right. Well, let me tell you, a division that's grown exponentially, and I have clients, is your private wealth group, where you really take it to another level on customization. You go out there and get private deals. And so this is what I'm saying. Talk about the private wealth group. Obviously, if someone comes to you with a large amount of money, you're not going to do a cookie cutter approach. If they're risk averse, what kind of things does a private wealth group do differently than your normal portfolio models?
Yeah, that's a great question, because if you look at our mutual fund and ETF models, and
Mhm.
and the equity models to some extent, that's really more designed for a retail investor, somewhere between $50,000 to $1 million, somewhere there. But we
Wait a
started to
minute. You
see that
mean
as we had
you don't need
clientele.
$500,000 to get help from Independent Solutions?
No, not at all, not at all. We have some ETF strategies we can get
I'm
to as low
sorry,
as
I had to throw
25,000.
that. I can't help seeing the commercials from you know who, right? And it looks great. We do better. Oh, by the way, you better have $500,000 or we're not going to help you.
Well, and that's a great thing too, is that, like I said, so much of what I do on a daily basis is working with advisors like you and ultimately their clients. And
Yeah,
like I tell the advisors, I tell the client, it doesn't matter. I mean, if they bring me a $30,000 statement and they need my help analyzing it, I'll do it, because it's what's in the best interest of them. I mean, yeah, of course we'd love to have the higher dollar amounts, but everybody's got to start somewhere and everybody needs help. And so but as we were growing, back in 2020, they realized that they had, a lot of affluent clientele that were coming in with some different needs than you would need,
correct.
at that more retail level. And so when they created the private wealth group in 2020, the idea was to create a unique and holistic experience for high net worth investors. Originally, it started around $1 million in investable assets, but that's actually kind of bumped up to about $2 million, because with some of the recent additions of our blended models and things like that, we can kind of service that $1 million to $2 million range without having to get into a true private wealth group experience. But for those that get into the private wealth group experience, we specialize more in comprehensive and sophisticated wealth, tax, insurance, estate, and really multi-generational wealth transfer planning. And what it's looking at, it's providing investors access to different products than they're normally going to see,
Right.
like you said, private debt, private
Private. Yeah.
equity, forward lead, charitable remaining trust. They have these things called opportunity zones and DSTs, different alternative investments that a normal investor doesn't qualify for, from being an accredited investor, to have access to those. But we have that. But in addition to the private wealth group, what's really neat about Independent Solutions is that, as you mentioned, I'm one of several certified financial planners that are affiliated with the firm. We have a certified estate planning specialist that can help with those needs. And we have affiliated accounting and tax professionals. So if an advisor like yourself comes and says, "Hey, I need help with this case," you get resources not just from me, but other, members on the team that can take a look and say, "Okay, let us help Denny's client, and put them in the best situation going forward."
I again, I've been using Independent Solutions ever since I've been in the family. Never Never had a bad experience. Always helpful to clients, which, when people need help, they don't want to just take an 800 number and get lost in the shuffle or get a robot. Or, hey, I'm sorry, but you don't have enough money to talk to a person, but
Right.
we'll send you an email. If
Yeah.
people don't realize that that is the truth, because here's the thing, many people think bigger firms are a better way to go. I disagree. I think you get lost in the shuffle and the personal experience is gone. I hear about it all the time where you just don't get the personal experience. They're unwilling to change and adapt to either markets or things that change with clients. And again, I'm lucky and blessed because I have a good relationship with everyone, and I want to continue it as well. What is what does the committee think is going to happen in the next? I know you don't have a crystal ball, and you'll probably all have different opinions on it. But overall, would you say that we wind up this year, or is it really going to be dependent on the election, you think?
Well, I will say, the last committee, we haven't had our meeting for this month. So it's
Okay.
kind of where thoughts are, especially after, the Fed read yesterday and all of that. But, in the subsequent meetings that we've had, I mean, everybody, when we've talked in the previous meetings, it's been more, still positive, on the outlook, however cautious, right? And I think it's almost like a politician
I
hedging
mean,
their bets.
we're
But,
nervously
that
seeing the market continue to climb. And I know the first thing is, oh my God, we've got to panic because it's at a high. Well, what if it continues and I mean, of course, inflation is a tough thing. We just don't know when it's going to stop rearing its ugly head. So that could affect it, obviously. I'm not sure what GDP is. I mean, what was the numbers on the last quarter for GDP? Do you recall what it was? Or
no,
we
I
weren't in
no.
a recession, obviously, right? Or maybe we were and they didn't count it as a recession.
I was gonna say, according to the way they count recessions now, I don't think we've ever going to be in a recession
But I
again. At
think
least not until a new. Yeah,
investor sentiment is still bullish on the market.
yeah.
So I'm concerned that the first sign of maybe some friction, because people think the market just goes straight up and it doesn't, that they're going to want to change course. Uh, in any rolling 10-year period, we typically have two, maybe three down years. Isn't that normal in reality?
I think so. I mean, and I think that's how they try to manage too. And
Yeah.
again, to your point, I mean, even with the markets being at all-time highs, they're not sitting still in the portfolios. In fact, in some of the strategies, they sold off, some of the winners, and took some of those gains and then, reinvested into some other stocks. And so they're always looking for, different areas. There's a lot of stuff that goes underneath the hood as the sausage is made, as they say, in the back office. And they
Yeah,
and
that's
they are
correct.
constantly watching, which is great because for guys like me and guys like you, we're more relationship oriented and people oriented, and so it's just great to have these people behind the scenes that are constantly monitoring conditions in the market and economic cycles and inflationary trends and numbers, and they can put together a strategy that we can then go out and take to clients like yours and other advisors, and hopefully we're right more than we're wrong. That's the
Right. And,
goal.
and and here's the thing. I don't want people to think like, for example, I mean, geez, your aggressive portfolio is smoking. It's like up about 22% in a year. Your conservative portfolio is just about 10%. I mean, so people need to realize, of course, they don't come to Independent Solutions for performance, but the ability to change course and adapt and customize it. Oh my goodness, some of your equity portfolios, your all cap SMA is about 38% up in the last year. Folks, that is not terrible. Dare I say, that does not suck. So it looks like, and people need to understand as we quote these indexes, that's net of fees. These performances are net of fees that we're displaying to people. Not many people just invest in an index. I quoted those numbers earlier, but that's not counting emotional decisions, fees. So I would say that you all have done an outstanding job in performance. But the fact that you have so much to offer, I'm really curious for those who are afraid. And I know some of my clients, we had bought some treasury bills in the last 6 to 9 months because no matter, what we said for a portion of their money, because treasury bills are so high right now, what would you say to those that maybe are risk averse, where they would want to see how things are going for the next year or so? Um, are bonds something to consider because rates have gone up? I mean, what does John Thurr feel about that market going forward?
No, obviously I don't want to speak for John or the rest of the committee, but I have heard that why consider bonds when you can get 5% in cash, so it's like
Yes,
there's a
yes.
lot or T-bills or those
The
types of
tree bills,
instruments, and
right,
so
right.
we have for those types of investors that are concerned and kind of want to wait and see.
Yes,
Obviously, we would probably recommend, depending upon their time horizon, response, all those types of factors, it would be probably more appropriate if we could invest into one of our strategies. But we do understand that there is some hesitation and nervousness. And so we do have a T-bill portfolio that we put together for clients that can basically allow them to sit in those maturities, whether it be a 6 month or a year, and kind of wait and see. And then if they feel ready to, kind of dip a toe in, then we can, like you said, very easily move into another strategy. So we do have those capabilities available. And then, of course, in the private wealth group experience, I mean, if we need to hold larger portions of cash or look into a fixed income portfolio, those types of situations and solutions are also available.
yeah, I know. Like I said, for some clients, we did do a treasury bill portfolio because some things had changed and they needed liquidity. That's the other thing that most people have to realize. I had a show yesterday where you have to have a long-term outlook for investing. I forget what you see on TV and people are trading, or I always laugh and say, if you really think the people on TV know exactly where the market's going and what the Fed's going to do, then they've convinced you that they have superpowers. We're all trying to do the right thing, diversify different asset classes. We're not trying to time the market, but you have to be in it to win it. I think the worst thing that investors can do is emotionally make decisions, because the market, my goodness, it moves a lot faster than it did 10 years ago, doesn't it? It's
Yeah.
not a sliding scale anymore. It's kind of like whoop. I can remember 2020 with the pandemic, and people thought that was normal. Oh, it was down 30% and it snapped back. And I said, listen, that's not normal. If in a long-term outlook, you're going to have a couple of down years, but the question is, do you rebalance before you're hitting bottom? And do you take advantage of the same equities we love that are on sale? Because they're not going out of business in the next 10 years.
Right.
And I think that with the political environment we're in and the inflationary, of course, investors are nervous. But the same token is these same investors that didn't panic 2 years ago are being rewarded very well. We could see another blip on the radar because of the political movement and the inflation numbers. But again, if you're investing for the next 5, 10 years, you might want to be looking for buying opportunities. That's just my humble opinion. I'm not a CFA, and I certainly don't have the credibility that your committee has. But wouldn't you say that's about an intelligent way to go about investing?
No, I would say 100% correct. And what you've done in the past, 45 seconds to a minute there is just solidify the importance and the need for a qualified financial advisor like yourself, because so much of our experience every day as humans is just to get, beat down with fear about
Right.
how everything is horrible and everything is, going to where. And so it's important to kind of take a step back and have someone trusted like yourself that can walk you through and say, hey, but remember, these were your goals. This was your time frame. This is what happens when a stock or a mutual fund portfolio goes down. These are opportunities, like you said, for buying, if we want to, rebalancing and all those types of things that people don't hear from anybody other than somebody like you. And so I think it's great. I think you're spot on. And this is the same way that we think, on the committee as well. and what we try to, tell clients every time that we interact with them as well.
Yeah, I think it's very important. Governing behavior, not trying to, follow trends and staying the course. I can remember not too long ago when certain people said, "Oh, the Dow's going to be at 30,000." And we're like, "What are you smoking, buddy?" And look where we are now, huh? And,
Yeah,
and so why isn't the Dow going to hit 40,000 or
right.
beyond if valuations continue? The one thing I do fear for our country is a little bit is our spending problems and taxation, which I think it's going to be an issue, but I still believe in people will be investing in equities. It's not like they can buy pork bellies in their 401k or something like that. So even though we have potential sell-offs going forward, I think consistently things are looking better than most people think. I think a lot of people just get afraid for watching too much news, or it's a habit they formed. You can't
Right.
watch it every day. I there's some clients that watch the markets more than I do. And Drew, quite frankly, I count on Independent Solutions to do the stock picking. That's not what I do. I'm a trusted
Right.
advisor that manages and governs my clients' behavior. I don't sugarcoat it. I tell them like it is. And if they're doing something that's kind of stupid, I'll say that's kind of stupid what you're doing, because the professionals are staying the course. So that again is uh, the most challenging part in what we do as advisors and investment committees. And of course, in the committee here, I don't see a picture of Lynn because she's really the boss of all of you. You know that, right?
Lynn is the superhero of the firm,
She is
for
the
your
superhero.
listeners, for your listeners, if they ever have the chance to do business with our firm, they will definitely interact with Lynn. Lynn heads up our operations team and is fantastic and takes care of all the clients, all of us. Is just a great addition to our team. So
Well, you've been a great addition too, Drew, because prior to you, Glenn had to do a lot of what you're doing. And then in your first presentation, he was like, "Yeah, Drew's got the job now. I don't want to do this anymore. I think I'm going to go home and count money." And you've been doing an excellent job. And I think really, I've personally witnessed in the last 7 years, the growth has been exponential. I mean, Independent Solutions was founded when, in the late 90s, or I'm trying to
and
remember.
two, well, yeah, so Independent Solutions was founded in 2008, and
It was
so
2000. What a
I
great time to start an investment committee.
Right? I mean, but what's interesting though is I worked at a previous firm and
Yeah.
I met Mike, Glenn, and Dan when they were just starting Independent Solutions. And so I was running another RA at the time and we worked side by side. And so I've known these guys going back to then and they're class acts. And so it's really a pleasure to work for people like that and work alongside them. And so, their success is, direct correlation to who they are as people and how they treat not only their clients but other advisors, employees, etc. And so it's been really exciting to be alongside on the ride for the last couple of years. And we hit 1 billion, but now we're on to 2 billion. So
I know that's the
that's our new
next
goal.
goal. Yes.
Yeah.
I've personally witnessed, yes, everyone, again, you don't always agree on everything, but you work collectively very well. I believe morale stems from the top. It's not brought up in an organization. So the founders alone, like Peak Brokerage, was also founded by producers for producers, just like Independent Solutions was founded for clients that wanted a niche experience. That is the key. Is it personal? Is it a niche? Can I change course? Will they listen to me? And I think Independent Solutions does all that. It certainly has for my clients. And we need to go on a few more road shows, man. I can grab the guitar, maybe sing a few songs, and or have a client appreciation party. And we'll have that in Florida. And I think, again, I thank you for talking and being a guest on the show. I'm trying to get John Thur on the show, but man, when he starts talking, forget it. It's like
I know it's
he starts
but it
quoting.
But doesn't it make you feel good to know that those are the guys and
Oh
gals that are
yeah,
running the money, that's
absolutely.
who's in charge.
Absolutely.
So
And David Mariacker, of course, was the maverick of stock picking for so many. That was another guy where he had clients starting off at 50,000 that became millionaires with him. And but he studies it like 18 hours a day. If he's not out chopping wood in the forest, he's looking at trends. What's he doing? It's midnight. Yeah, he's looking at some companies that he wants to buy tomorrow. And it's just amazing to see. Certainly not what I do. Again, I bring them to you because you are the professionals. And I've used other RIAs and it's just not the same. So I appreciate you coming on. Maybe we can do this next quarter. Everyone has to have a prediction. So come on, this is a chance to be on the hot seat here. We're at June 13th. What do you think going into the last quarter of this year? We up or down?
I think um I think we'll end the year positive. Just say that.
That's a good political answer. I think
Yeah.
we will too, unless some crazy things happen, like if certain global events get out of control, the Gaza Strip situation, the Ukraine situation. But people do have to understand, I really mean this from my heart. This is a passion of mine besides playing music and public speaking. Uh, you have to stay the course and uh, downside swings are a natural progression of the market. Absolutely. It always has been, and it always will be. That's how it is. Don't get caught, as I tell many people, trying to play it too safe and trying to guess the market, because what will happen, like typically in the last 2 years, the market it really has surprised me. It's done better than I thought it would. And where we go from here, I don't know. I'm going to guess as well that we're going to end up, not down. The only thing that could change it again is if some of these global situations just get out of control where investor sentiment starts getting foul. But for the average investor that's investing for another 10, 15, possibly 20 years, I wouldn't watch the news too closely. You might live longer if you take my advice.
That's right.
I'll go out on a limb on saying that. So hey,
Yeah.
let's look at where we are right now and take this up in the next quarter. Tell John
All
he's the
right.
next guy on the Independent Solutions interview list because I can't wait to hear what he says about yield curves and what he's going to predict. You know, he was also at our get together. He was bullish on the market when this was back in April when we all got together. And even last year, when we were like, wait a minute, what about me? He said, yeah, whatever. I'm just telling you, fundamentally, there's more positive in the market than there is negative. And he was right.
Yeah.
So let's hope that it continues for investors. And
Yes,
folks, if
sir.
you're listening, get with a professional. They need to understand that before we invest $1 of your money, you have to take a risk tolerance questionnaire. It's very extensive. So you do understand how the parts work and how they move and keeping your expectations in check. That's another challenging thing. Some people think that money management is about giving them 20 and 30% returns. No, that can happen naturally, but that's in one particular instance. When you diversify and having different asset classes, you're not going to make those kind of returns. However, you can still outpace inflation for a decent fee. And I believe that. So, any parting shots before I let you go? I know you've got to count and print money as we leave here.
No, I want to say thank you, Denny. It's a pleasure to be on your show, and we really appreciate your partnership with our firm. And we are on standby to help you and your clients in any way that we can.
Awesome. Well, hey, thanks a lot, my friend. Drew Middle, ladies and gentlemen, Independent Solutions. And thanks for tuning in for the Denny Artachi Show. We'll talk to you soon. I don't know if it's raining in Texas, but we're building our own arcs here in Florida the last 2 or 3 days. So,
I understand.
Drew, thanks for your time,
Great.
my friend, and I'll talk to you soon, okay?
Okay, take care.